Trump's big, beautiful bill has officially passed, marking one of the largest tax cuts in U.S. history. It's going to lower tax rates, boost deductions, and offer incentives that savvy taxpayers can use to significantly reduce their taxes. But there's a lot of confusion about what exactly has passed. And a lot of people are wondering how this will affect their wallets and what they can do to make the most of it. In this video, I'm going to break it down for you in a simple, straightforward way. I'll give you a clear explanation of what to expect. To qualify, the car has to be American-made, and there are income limitations based on your filing status. If you qualify, you can take this deduction even if you don't normally claim the itemized deduction. If you have kids, you might also benefit from the updated child tax credit. Previously, this credit was set to expire at the end of 2025, which would have reduced the amount from $2,000 to just $1,000 per qualifying child. There are some massive tax breaks for business owners in this bill, and increases the income thresholds for eligibility by $25,000 to $50,000, depending on your filing status. This allows business owners and investors to take an additional deduction for tangible business property. Think vehicles, machinery, equipment, and even things like yachts or aircrafts. Previously, this deduction was limited to just 40% by 2025. But this bill brings that rate back up to 100% for qualified courtesans made after January 19, 2025. This gives business owners a powerful tool to make purchases that reduce their taxes while helping them grow their businesses. So, there you have it. We've covered the key changes in this tax bill, from the permanent reductions in individual taxes to the big benefits for businesses. These changes are set to lower the tax burden for millions of Americans and create huge opportunities for business owners and investors. However, making the most of these tax breaks requires understanding the details and working with tax experts who know how to navigate the code. If you found this video helpful, don't forget to hit the like button, share it with your friends, and subscribe to the channel so you don't miss out on future videos on how to optimize your taxes. And if you need help or want to learn more about tax strategies, reach out to my team at mikepht.com. Thanks for watching, and I'll see you in the next one. Some business owners may even be able to restructure their business to qualify for the QBI deduction if they had NT previously. One of the biggest is the permanent extension of the Qualified Business Income Deduction, introduced in 2017. This deduction allowed business owners to take 20% off qualifying business income. For example, if a business owner had $150,000 in qualifying income, they could deduct $30,000 from their taxes. For individuals earning below certain thresholds, this deduction was available automatically, as long as they had self-employment income, whether through an S-corp partnership, LLC, or even a side gig. The deduction starts to phase out for higher-income business owners in specialized trades, but many business owners were not affected by these income limitations. This bill extends and increases the credit to $2,200 per child, which is expected to save taxpayers nearly $800 billion over the next decade. The credit phases out based on your income, starting at $200,000 for single filers and $400,000 for married filers. If that sounds good to you, don't forget to hit the like button, leave a comment with your thoughts, and let's dive in. Now, this bill boosts that to $6,000 for each qualifying individual, though income limitations still apply depending on your filing status. While this doesn't fully deliver on the no tax on Social Security promise, I think it's a step in the right direction for seniors. Let's start with the changes that are going to impact nearly everyone watching this. Despite what the name suggests, it doesn't mean all overtime wages will be completely tax-free. What this bill actually does is allow certain individuals to take a deduction on their overtime wages, which effectively means no tax on that portion of income up to certain limits. First up, the permanent reduction in individual tax rates. This is the most expensive provision in the bill, and it's expected to lower government tax revenue by over $2 trillion in the next 10 years. That's $2 trillion being put back in our pockets. The 2017 tax cuts reduced several tax brackets, like the 39.6% bracket to 37%, the 25% bracket down to 22%, and the 15% bracket to just 12%. These tax cuts were originally set to expire by the end of 2025, but this bill makes them permanent. Next, we've got the permanent increase to the standard deduction, which is something 90% of taxpayers claim. The 2017 tax cuts more than doubled the standard deduction, but that increase was temporary and was also set to expire in 2025. And local tax deduction, which allows people to write off state and local taxes on their federal tax returns. The 2017 tax cuts capped these write-offs at $10,000, which hurt taxpayers in high-tax states like New York, California, and New Jersey. If you paid more than $10,000 in state and local taxes or property taxes, you couldn't write off anymore. This new bill temporarily raises that cap to $40,000 through the end of 2029, making the itemized deduction more beneficial for millions of taxpayers. But that's just one of the temporary upgrades. This new bill not only extends the increase, but makes it permanent. This is projected to save taxpayers over $1 trillion in the next decade. But that's not all. The bill also makes temporary upgrades to itemized deductions, which taxpayers can opt for if it's more beneficial than the standard deduction. Before this bill, there was a lot of talk about the SAT state. This bill will also let taxpayers write off up to $10,000 of car loan interest on qualifying vehicles through 2028. Another update in the bill targets seniors. Before this, seniors could claim a $2,000 deduction or $3,200 if they filed with a qualifying spouse. Now, let's talk about the no tax on overtime promise. Qualified tip income refers to tips received in jobs where tipping is customary, like in hospitality, personal care, transportation, and some creative and retail services. However, certain professionals like doctors, lawyers, accountants, and others in specialized fields don't qualify for these deductions, as their businesses depend on their expertise and reputation. Qualified tip income refers to tips received in jobs where tipping is customary, like in hospitality, personal care, transportation, and some creative and retail services. However, certain professionals like doctors, lawyers, accountants, and others in specialized fields don't qualify for these deductions, as their businesses depend on their expertise and reputation. Let's not forget about businesses. Before this bill, the QBI deduction was set to expire in 2025, but this new bill makes it permanent in addition to the QBI extension. There's another major tax incentive for businesses: the permanent extension of bonus depreciation.